This is your October 2022 Ottawa real estate market update. So I'm gonna run you through some quick stats. I've got my cheat sheet here, throw some numbers at you about what happened in September 2022, and then we'll talk a little bit about my interpretation of it and what I think it all means. Last month, September 2022, in Ottawa, we sold a total of 1,080 homes. That was way down from what we did last year in September, what we did the year before even. Out of those 1,080 homes, 816 of them were residential homes or freehold homes. That's about 34% less than the amount of freehold homes sold in September 2021, so a huge drop. And 264 of those properties sold last month were condos. That's about 27% fewer condos than we sold in September 2021. So again, big drop. The amount of inventory, so total homes for sale, is also climbing. We're sitting now at 3.1 months of inventory. That's higher than it was last month. And compared to September of last year, that's 250% more inventory. So 2.5 times more inventory than we had in September last year. For freehold homes, for condos, we're sitting at 2.7 months of inventory. That's about 70% more condo inventory than we had in September of last year. The average sale price of a home in September of this year for a freehold home was about $707,000. That's more or less even with September of last year. It's 0.5% higher. The average sale price of a condo was $451,000 September of this year. That's still about 6% higher than September of last year. So those are the stats. You don't need them anymore. What it all means. So a lot of people, a lot of agents will tell you that, well, you know, the inventory still shows that we're in a seller's market. Sure, technically, a lot of people will say that if there's less than 5 months of inventory, it's a seller's market. However, you've got a house for sale, you're a realtor, I can tell you it certainly doesn't feel like a seller's market out there. I like to characterize this as a transitioning market or a shifting market. I think it's more important when we look at inventory to look at sort of the month-over-month trend as opposed to just the general number. And the month-over-month trend for the last few months in Ottawa is that inventory is climbing. We have more inventory every month so far than we've had the previous month. And that's been a trend that's gone on really since about March. And so if that trend continues, obviously we're going to transition from, you know, what we characterize as a seller's market to a balanced market and maybe eventually to a buyer's market. The other trend that I like to look at is the month-over-month average sale price. And so that statistic's actually a little bit more encouraging if you're a seller. What we saw from March all the way to July was that month over month, the average sale price was dropping quite a bit in Ottawa. Now from July to August, there was a drop, but it was less pronounced than it had been leading up to that. And then from August to September, so the period that we just finished, prices actually remained pretty flat. So the average price of a home didn't really drop this month compared to last month. Now, if you remember at the beginning of September, there was a big rate hike that was announced. A lot of people thought that spelled doom and gloom for the market. Oh, prices are gonna drop another 15%, another 20% if you're reading, you know, cbc.ca and any of those other corny publications. They were predicting that the market was just gonna collapse. Obviously that didn't happen, right? The interest rate hike had very little to no impact on sale prices for this month. And that, to be honest, was kind of predictable because when the Fed raises the prime rates, it only impacts variable mortgages. And for the last few months, realistically, no one's choosing a variable mortgage. Everybody's going with fixed rate mortgages, and those have remained fairly steady. So I think that in spite of what a lot of media outlets will tell you, the next time there's a rate hike, I think we're going to continue to see lessening or little to no impact of these prime rate hikes on the average price of a home. Now, there's other factors that can for sure influence it, you know, inflation, just overall demand, and then continually rising inventory. However, it does feel like prices are starting to stabilize. I think it's too early to say that we've found the bottom, but if things continue along the trend that we're seeing over the last couple months, then we may get to a much more stable market, right? So we may shift from a changing market or an unstable market to a stable market. I personally think if you're a buyer, there are some great opportunities in unstable markets because you can really capitalize on seller fear. There's still a lot of sellers that are freaking out because their property hasn't sold in two weeks, right? Which is not normal, but it's what we've become accustomed to over the last few years. And there's also a lot of sellers out there, to be honest, who've already bought and now they have to sell, and they were planning on being able to sell like that. It's taking more time, and so they're getting a little desperate, a little antsy. And so what I'm seeing is there's opportunities to really, honestly, like to throw some lowball offers out there and to have some success. If and when the market stabilizes, things tend to change. Now, all of a sudden, sellers kind of know what the value of their home is, and they start to understand that it'll take 2-3 months to sell it. So they tend to be a little less flexible on their price. So not a bad time to be a buyer. Again, no one has a crystal ball. I don't know what the market's gonna look like in 6 months, neither do you. But if these trends continue, again, probably a good little window right now to be a buyer and to capitalize on the fact that there's still some of that uncertainty in the market. If you're a seller, again, the flattening prices are good news. It means you can probably be a little bit more patient, that you don't have to freak out if there's another interest rate hike. It doesn't mean you have to chop another 50, 100K off the price of your property. But in this new reality where just fewer homes are selling, you are going to have to be a little bit more patient than you would have had to be earlier this year. So that's my interpretation of the market. If you have any questions about your specific situation, if you want to dig a little deeper into the numbers, feel free to send me a direct message. And while you're at it, don't forget to like and subscribe. I'll see you next month. I almost forgot. We've also got 2 amazing listings that just hit the market this week. We'd love to have you check them out. We did some really cool listing videos for both of them. One of them is at 166 Crocus. Insane house, a great photography studio, really unique property with a really unique listing video. The other one is more of a starter home. It's a really great little condo townhouse at 168 Salter. So if you're curious, we'd love to have you check out those videos. You can see them right here, right? Is that where you're gonna put them? Yeah, they're gonna be down here. Okay, so right here, there's gonna be 2 links below my fingers. Click on them, check out the videos, and if you have a property to sell and you'd like a really cool listing video and an awesome sale price, awesome result, an agent who actually picks up their phone, give me a call.